setting new standards in podcast excellence. You have joined the WBT, fully focused on business and taxes. Here is your host, Michael Lodge.
And welcome to the WBT. I'm Michael Lodge, and I'm glad that you've joined me. So today we're talking about financial statements and how to understand and read financial statements, and how important it is to understand the story that your financial statement is telling you. So many times I have clients that come into my office and they don't quite understand what it takes to run a business without a financial statement. A financial statement is the breakdown of your income and expenses, and looking at your assets and liabilities and understanding how strong you are. If you don't understand how to read your financial statement, you are going to get yourself into trouble later on. If you take the time every month to sit down and look at your financial statement month by month. For my clients, I always produce what is called a pull across. In other words, I pull across all the months, and you can look at them all at one time. January, February, March, April, May, all the way through December. And by doing that, you can look at your income statement and you can see, well, how come all of a sudden my payroll expenses went up? And how come all of a sudden that in that very same month, my revenues or my income went down? You need to be able to ask that question every single month of your accountant or your accounting team to understand where you sit as a company financially. And if you don't do that, then later on, you're going to be wondering, why is it I don't have enough cash to operate my business? It's because you didn't pay close enough attention to the performance, to the financial performance of your company. So let's talk about first the income statement. So let's go over a kind of a semi-professional description of what an income statement is. And if you want to see this, I encourage you to go to my blog at www.wbtpod.com. I have two blogs there on a simplified form of description of what a financial statement is, and then I have a detailed section of what a financial statement reads like. So let's look at the description of what an income statement is. The income statement, like the balance sheet, helps to illustrate the current value of a business. Revenues and expenses are listed on the income statement as they are accrued and categorized as operating or non-operating activities. First, sales are matched with cost of goods sold to determine gross profit. Next, operating expenses are deducted to reveal operating profit. From this point, any non-operating revenues and expenses are listed, generating earnings before interest, taxes, and amortizations, EBITDA. Taxes are then deducted to reveal the net income. Shareholder distributions are typically made using this final sum. So investors watch it closely, and so do bankers. Investors are in bankers, and analysts also pay close attention to the operating section of the income statement to gauge how efficiently management operates the main activities for the company. So you think about this. Now, if bankers and investors are looking at how you're operating or managing the company, so should you, based on your financial statement. It's very important. So, when you look at the financial statements, this is what you will see. Just one moment. I'm sorry, I'm broadcasting this from South Carolina. And over the last few days, I've been here 2 weeks now. This is my second week in South Carolina. And the weather has changed tremendously. It was hot up in 91 with about 46% humidity. Then it got cool down into the 60s and low 70s. And then today it's raining. So my voice is changing with the change of this weather. I'm trying to adapt. I'm only 2 weeks into it, so be patient with me. So let's talk about the income statement one more time. When you look at an income statement, the very first line that you will see will be identified as revenue or income. That's where you list all of the revenue or income that you have sold to clients. So if you're a realtor, you will probably have one line there that says real estate sales. And then you'll have, if you are doing rental property, then you have one line for rental income, and etc. And you might have one for mortgage income if you're doing mortgages out of your office. But that is where your income is listed. Then right below that, you have what is called cost of goods sold. Now, if you're a manufacturer and if you're making a widget, you're going to have costs attributed to that widget. Everything that went into building or making that widget. That's your cost of goods. So then income minus cost of goods gives you one line that says gross income. Okay? Below that, you will then have your expenses, or what we call general operating expenses. In there, that is where you list your rent income, your payroll income, your expenses to operate your office, utilities, electricity, telephone, internet, everything that has to do with the operating side of your company. So then you have a line that has total expenses. So gross income minus total expenses gets you to net income. That is so important to be able to read on a month-to-month basis. That's why I love for you to have a pull across so that you can see how well you're doing and if it's consistent each month. Or where you need to ask the questions on how come our revenues went down and our payroll went up? Or similar questions to that. You need to be able to look at your income statement so that you know exactly what's happening on a month-to-month basis. Don't feel that your accountant has it all under control. It's your business. You're the CEO. You have to ask the questions on a month-to-month basis. I love what I do for my clients. I have what is called a scrub meeting. And a lot of companies hire me as a temporary or full-time CFO where I go in and I work with their accounting staff. And I ask the questions before I even present it to the CEO or to their management. But I have what is called a scrub meeting. So I call everybody into the room. And we all have copies of the income statement and balance sheet. And we start going down line by line. How come this happened? What happened here? Everything. Because when I do my write-up to management or to the owners, I want to be able to tell them what happened so that they can make an executive decision on what they need to do to correct any issue or to give praise to any outstanding progress that the company has made. But everybody should be involved in that scrub meeting. Accounts receivable, accounts payable, the bookkeeper, the whoever, payroll, everybody should be involved in that scrub meeting so that you scrub those numbers. So that you have a clean, pretty good, clean financial statement before you sit down with management and the CEO. And if CEOs are not sitting down with their accounting department on a month-to-month basis and going over the results, then we have a problem, because anything could happen. Misunderstandings, investment issues that the CEO got involved with the company, but failed to tell accounting. Remember, communication in finances with senior management is vital, because they're responsible for how their departments are working. A small business or entrepreneur is responsible for how his business is working on a month-to-month basis. And it's their responsibility, your responsibility, to look and understand those financial statements. You don't need to know the full detail, but you need to be able to ask the questions that you need to know. Because at some point in time, you're going to have to tell that story of that financial statement to an investor or a banker or some other type of institution. Know your financial statements is vital. Know your income statement. So then, let's talk about the balance sheet. So let's go over the official statement of what a balance sheet is. The balance sheet shows the company's assets, liabilities, and shareholder equity. The basic accounting formula, assets equal liabilities plus shareholder equity, provides the structure of the statement. Assets are listed first in order of liquidity, including cash, which is the cash in your bank, short-term investments, accounts receivable, notes receivable, inventory, and prepaid expenses. Next, long-term assets such as investments, fixed assets such as real property, other assets, and intangible assets are listed. The sum of all assets should equal the following section of the balance sheet, which lists all liabilities in order of maturity and shareholders' equity. Investors need all of this information to determine the current value of the company. Not only do the investors need it, but also the bankers need it when they look at you for any loans that you may need to get. And you, who are responsible for the overall thrust of your company, need to understand the balance sheet. You need to understand it. One line there are two lines on the balance sheet that you should always question. That's the accounts receivable number and the payables number. The receivables number are clients or customers who owe you money but have not paid for it. You need to see how many days out. Are they 30 days out, 60 days out, 90 days out, 120 days out? How far are they past due? Because sometimes it takes you to pick up that phone and call that client and say, hey, how come you're so outstanding on this receivables? Why haven't you paid us? Then the other line, well, let's go back to that. You have to make sure that line isn't overdone. In other words, you have clients that are so far out of due, because remember, when a client gets so past due in paying, it becomes very difficult to collect. And normally, what happens is if they're that far out, you've either got to sit down with them and set up a payment schedule, or they're going to declare bankruptcy and you're going to lose it all. You may get pennies on the dollar if you're lucky. So make sure that you're paying attention to that accounts receivable line. Then the other line is the accounts payable line. Are you paying your bills on time? What is outstanding? Why are you not paying the bills on time? And then you have to ask, well, maybe as you look at your cash flow up above, you look at your cash statements, your banks that you have open, maybe there isn't enough cash flowing in to cover the liabilities sitting below.